Hi, I'm Keith Boyle. I'm the CEO of Newfoundland Gold, and I'm here to talk to you today about the Queensway Gold project that we're advancing in Newfoundland. Just as a way of intro, we've got, of course, forward-looking statements. I'll be stating some forward-looking statements, and just read the disclaimer at your leisure. So, really, the summary of the Queensway project in Newfoundland Gold is that we've recently released the preliminary economic assessment, and it highlights a phased approach that gets us to cash flow rapidly. We've got a property package that's 110 kilometers long.
Okay.
So we've only really explored about 5 kilometers of that 110 kilometers of prospective ground. And so we have lots of growth potential on strike. It's wide open at depth and really can be a new camp in the area. We're in Newfoundland, a Tier 1 jurisdiction. It consistently ranks in the top 10 of jurisdictions. And, excuse me, we're just outside of the town of Gander, and really within an hour of the property, we've got over a population of over 40,000 people to pull from. So we're quite excited about building an operation there that will be around for a long time to come. Now, in the new year, we changed management, both at the board level and at the senior leadership level. And as you can see on here, the top row is the board of directors. The bottom is the senior leadership. Paul Hewitt came in as chair in December, and he brings a wealth of experience, over 37 years in the mining business, most recently with Karora in Australia and Klondex, and now with America's Gold and Silver, but is chair with us. We've got Bill Hayden is new. Chad Williams joined the board. He's an investment banker, analyst on the street, mining engineer by training, but he started in March when Colin Kettle resigned from the board. And then VJ has been on the board for some time now, and myself and Melissa are new to the board as well. So five of us, of the 6, are new on the board. I joined in January of this year, so I'm coming up to 8 months pretty soon. And so my background is a 40-year mining engineer, and I've more than half of it is in narrow vein gold or gold systems in the Abitibi and Timmins camps. Melissa has been the vice president of exploration for some 5 years now, and most recently was promoted to president. She's done a great job. She's found this fantastic deposit. Mike's been our CFO for 5 years. Fiona just joined us. She's a doctor of geology and has many years on the communications and corporate development side. Jared, long experience with, he's a doctor of environment, if you will, and so he was promoted from within, proud Newfoundlander, and really wants to build something in Newfoundland. And so he's a real champion of the deposit. And Rob Asabgi is my study manager. He was my study manager at Reunion Gold, was my last assignment. And so Rob's been leading the charge on putting the studies together and getting the PEA out, and now advancing all the other studies required to bring the project to fruition. Rob's background, mining engineer, many years, and most recently he was the, or more recently, he was the vice president of the Manitoba division for Hud Bay that brought the Lawler deposit into production. So some good project development expertise. As far as our capital structure goes, we've got 230 million shares outstanding. The donut to the left is as of the $63 million bought deal that we closed. You can see that Eric Sprott is 19%, Palisades is 19%, and institutions now have 14%. They came in from less than 1% basically, and really liked the story, and with lots of demand. And so we were quite excited to have such strong support from the institutions. Now, we do have a private placement that was announced in May, and it will happen, it should happen in August when we have a shareholder vote. Eric Sprott is the lead on that private placement of 20 million. And we require a shareholder vote because he's going over 20%. And as you can see in the donut on the right, he'll be at 23% pro forma after the private placement in August. We're covered by 5 analysts, with SCP being the last one off the ranks, but good broad coverage in the market, and we're also listed on the TSX Venture and the New York Stock Exchange. So as I said, our home is in Newfoundland. We're a Tier 1 jurisdiction, ranked top 10 at the Fraser Institute. We're just outside of Gander, some 15 kilometers outside of Gander. And access to infrastructure, well, Gander has an international airport. We have the Trans-Canada Highway that goes right through the property. We've got the renewable power that goes right through the property. And we've got a proximity to deep shipping ports. So really well located, and with that population of 40,000 people within an hour of the project, just a really great spot to build a project from. And government of Newfoundland are extremely supportive of development, and I just can't say enough about how they've been so helpful. We talk over some things, and talk about how to go through the permitting process, and they've really helped with being able to tighten those timelines around permitting. So the PEA, when you step back and you look at it, what we looked at was we have a high-grade core. We have a high-grade core that of the ounces in the resource, 75% of those ounces are in 25% of the tons. And that high-grade core comes right to surface. So we looked at this as, how do we start getting to cash flow right away, minimize dilution to shareholders, and use the cash flow to then build an operation that will go on for many years. And so what we outlined in the PEA is exactly that, a phased approach. Phase 1 will be building a 700-ton-a-day mine, open pit mine, but will be toll milling, custom milling at a custom mill in the area. That will go for 4 years, and during then years 3 and 4, we will build a 7,000-ton-a-day processing plant on site while we expand the open pits. And then in year 5, phase 3, we will then add the underground. And so as we build our production, we're doing it with the cash flow from the operation, minimizing the amount of that initial investment. So when you look at how we've outlined that in the economics, it provides for lower capex, better returns to shareholders. But that's our start. We've got growth potential, both. We've got the strike potential, we've got depth potential, and with a 70,000 meter drill program currently underway, we're upgrading the resources from inferred to indicated. Within the open pit outlines, we're identifying new targets to grow the resource. We're drilling between pits to also grow the resource, and we're drilling along the Appleton Fault Zone to expand our footprint along strike and to better define the camp potential. We have other programs on a regional scale. In terms of the base case, the highlights, the economics are such that at a $2,500 gold price, the net present value is $743 million. It gives us a 56.3% after-tax IRR with less than a 2-year payback on that. $155 million initial capital cost for phase 1. Once that's in production, phases 2 and 3, both the surface, the 7,000 ton a day plant plus the underground, we will use the cash flow to pay for the $585 million. And the life of mine AISC is $1,256. So the 1.5 million ounces over that 15-year mine life will cost on average $1,256 US dollars per ounce. Production over years 1 to 4 will be 69,000, just over 69,000 ounces per year. And then once it ramps up, years 5 to 9, with both the 7,000 ton a day plant and the underground operating, we'll have just over 170,000 ounces per year. So that builds a really nice operation. What this project also has is fantastic leverage to gold price. For basically for every $100 increase in gold above the 2,500, we get 89 million increase in NPV, but the IRR really stands out as getting much better. So if you look at $3,300 go right to where the gold price is today, you're looking at 1.45 billion NPV and 197% IRR. In historically, so the deposit was discovered back in 2020 and was drilled for 5 years. So, yes, lots of drilling had gone on. Yes, this is a narrow vein deposit and will require and continue to require lots of drilling. However, a lot of that drilling was to upgrade from the inferred to indicated category. And so when we put the PEA together and converted from the resource to the mine plan, we had a really high conversion, in particular with the indicated category, where you've got 92% of the core in the open pit was converted rather, and the inferred, 85% of the inferred in that core area was converted. Now, for the underground, you had 92% of the indicated was converted, but less so for the inferred. And so for us, that just shows us that we've got more work to do on the underground. But overall, we've got a high confidence resource in the PEA because over 75% of the ounces are in the indicated category. The infilling that we're doing currently will upgrade the resource from inferred to indicated. Now, as far as processing goes, we really have, I call it, 2 types of mineralization that we're treating. One is we've got a simple crush, grind, gravity, and leach scenario. However, the lower grade materials do have some refractory component, and that refractory component requires flotation in order to recover. When you put it all together, and the test work has shown that both phases 1 and 2 of the PEA assumes a 92% recovery. 48% of the gold will report to doré, in other words, straight leaching, and 44% of the gold will be reporting to concentrate that will then be sold in the marketplace. And for us, that's how we see the plant, the 7,000 ton a day plant getting built. Initially, the toll milling will be just without the flotation, and we'll get the 92% recovery with just a straight gravity and then leach process. So here's a picture of the production and cost profiles. On the left, the chart itself, you can see the production in ounces by phase. So the dark is phase 1, the blue is phase 2, and then the beige is phase 3. And you can see there the ASIC profile where it goes down, and then as production goes down, the ASIC profile goes up. So what we want to do is with exploration is fill in that back end, out here with our exploration in order to maintain a more consistent production profile. So as I mentioned before, years 1 to 4, it's 69,000 ounces, just over, for about $1,282 an ounce. And then years 5 to 9, 172,000 ounces at just under $1,100 an ounce. And our leverage to gold price, you can see how when we at $2,500, that initial capital investment gets us into production, but at $3,300, it really does pay back quickly when looking at that initial investment of $155 million. So just running through the project on a more visual basis, if you will. So St. John's, Newfoundland, out on Newfoundland, the island on the right, where the Queensway project is. When we zoom in, you can see that we take up about 2% of the island, so a large property package on the island of Newfoundland. And we've got a number of neighbors on this island. We've got exploits that sort of bound us to the north. We've got Equinox Gold that just acquired Calibre. Mining is putting the Valentine project into production, so that'll be a big mine into production. Maritime is putting their Hammerdown mine into production, and they'll be producing gold this year as well. Firefly is advancing their Ming mine and Ming deposit, and they recently received their environmental assessment, and they got that done in 45 days, which is quite astounding. And so we're looking to advance our project quickly, and it just shows how the government is willing to work with you on that. So government has stated they want 5 mines by 2030, and you know what? We're going to be one of them. So the property package I've mentioned is 110 kilometers in strike along two major fault zones, the Appleton Fault and the JBP fault zones. Faults really strike along our property package. And when we zoom into where the resource is, you can see how the resource is a number of vein clusters that then have pits that have optimized on them. And, people say, oh, they're small. Well, to give you a sense, this whole area here, it goes all the way to, that's about 5 kilometers long. So it's not small. Our main pits, if you will, that's about 2 kilometers long, or just under 2 kilometers long. So these are substantial deposits. And now there's some smaller pits that we'll look to expand with some of the drilling we're doing. And with the conversion of the resource now to mine production, you can see the table on the right there. It shows you 1.6 million ounces at 1.85 diluted. And you can see a typical layout where the pits have been optimized and designed on the vein clusters. You've got I'll show you maybe on the outline of the infrastructure. You've got the proposed buildings at the bottom. You've got the mineralized stockpile in orange. So as we operate at an elevated cutoff, bringing high grade forward, we're going to stockpile the lower grade material to be processed at the later date. You've got the waste management facility where it's going to be stockpiled, and then you've got an overburden pile. Question you'll have, of course, is, well, where is the where's the tailings storage facility? Well, the beauty of having a design like this is that we're able to use an empty pit or empty pits to then put our tailings in, and you'll see that in a minute. Our site layout, typical mobile warehouse, processing plant, crusher, substation, admin building, and the access road, which goes right to the Trans-Canada Highway. And then we'll have an underground, and we've got 5 different ramp systems. As you can see, quite shallow, less than 500 meters, and it's all wide open. Most of the drilling has been concentrated above the 250 meter level, and so lots more drilling, lots more follow-up to do with these underground deposits, which is why as well we pushed it out to year 5, because we knew that we'd have more work to do. And so this is to depict, the development phase, so phase 1, years 1 to 4, this is what you could expect to see as a layout. Years 5 to 9, you can see that piles grow. However, I'll point to Iceberg and Keats West, where we will now have tailings being deposited in the open pits. And then years 9 to 13, where the tailings start getting deposited into Keats as well, and the waste pile grew even more. And then the last 2 years of processing will eliminate the mineralized stockpile, and basically this is the end of the mine life, with a rehabilitation phase thereafter. And so we'll cover the pits that have been filled with tailings, and the others will be let to fill with the natural groundwater. So when you step back now and let's look at, this is what we've got. This came from that original resource. Our discoveries were focused in on the core, and that's where we looked at. However, when you look further afield, we've got some really good potential. We've got, of course, we're doing some drilling now. We've released recently our Keats West infill drilling that have come back with some very good results, I would say as expected. However, it's always nice to see that the drill bit is confirming what the geologists have interpreted. And then what we have is some planned grade control drilling, both at Keats and Iceberg, where the veins come right to surface. And this is where we will initially start the mining phase. The grade control drilling will be at a density of 5 by 5 meters. And that's really to give the geologists all the information, all the data points they'll need to better understand and better treat the high-grade veins and that high-grade nuggety nature of this deposit. As well, we've got Iceberg channel sampling. You can see the orange lines over top of the block model there in the Iceberg pit. You can see there's some orange lines out to the left. There was a structure there that had not been previously picked up in the drilling, and so we're channel sampling that as well. But those results should be coming in the coming weeks, and we're quite excited to see what results those will be. We've also excavated the Lotto over top of the Lotto deposit. You can see in the photos there where the trucks and shovels are excavating it. The technicians are washing it right down so that mapping first and then channel sampling will follow. As far as the depth potential goes, as I mentioned previously, most of the drilling done above 250 meters and then sparser at depth. So really, we're going to take some time and follow up on that. However, you can see from these results that the structure's there and the grade continues at depth. So watch this space. We released this year results from Dropkick, which is 11 kilometers to the north of the core. And this was acquired when we acquired the Kingsway property from Labrador Gold. And you can see some results that we've received as some pretty spectacular results. 26 grams over 16 meters, 89 over 5.8, 23 over 2.4, just over 47 at about 4 meter intervals, and 42 over 15. So some really good results at Dropkick, really exciting. New target, not in the resource. And so we're looking at drilling it, and we're drilling it currently, as well as in Pistachio, to follow up on these results and see if we can't add that to our resource going forward. So these results here, as we mentioned, this vein is growing and it's still wide open, and we're following up on it. So we've got this camp potential, and we've got lots of grab sample. I'll call it smoke, if you will, that we've got. The purple is over 10 grams. The red is 3 to 10 grams. Some really high-grade grad samples that we still have lots to follow up on in terms of targets. And then, approximately 60 kilometers rather to the south, Paul's Pond and Devil's Pond trends. You can see some results, maybe not as exciting as Dropkick, but we've got some very good results to follow up on down in this area as well. So our development schedule that we're looking at right now is we released the PEA. We want to get our permitting for the phase 1 completed through 26 so that we can start construction in 27, and then with a short construction window, start producing quickly. Phase 2, we want to begin a feasibility study sort of Q4 of next year so that we can permit over the 2 years, 27 and 28, so that we can then begin construction in 2029. So we've got lots of infill drilling, we've got definition drilling, we've got regional exploration that's focused on finding that next major deposit, and we've got the channel sampling and excavating that's going on. Again, detailed geology to really ensure that we've got the right interpretation. As far as engineering goes, we've got lots of supporting studies, metallurgical testing, geometallurgical modeling, so that we better understand the distribution of the refractory gold. We've got both geotechnical and condemnation drilling going on, and many trade-off studies that just to zero in on selecting the right configuration that we want to bring forward. So the baseline studies will be finished this year. We're preparing the project description, and we will be in a position early next year to submit our environmental assessment application. And we continue to engage with both communities and government in order to advance the project. And like I said, I keep repeating, we've had support at all levels of government and in the communities that surround the project. So really, in summary for us is, we had the objective, rapid path to cash flow, and we're focused on that. The low initial capital prevents or enables us to get into production by minimizing dilution, using that cash flow then to build the operation, And, pending approval, we should be in production in 27. So we've got great economics. We're building a mine, that'll produce over 170,000 ounces a year at just under $1,100 an ounce for that 5-year period after the plant is built. The NPV to capital ratio is 4.8. That's a great use of capital. And we're looking at, and we've got the trade-off and optimization studies underway. So great jurisdiction, skilled workforce, strong social license, and infrastructure, and we've got fantastic land package with lots of potential and a high-quality mine plan to support whatever we want to do in the future. I'm really excited by the project and prospect. That's why I joined, and it just continues to surprise and encourage me to advance this as soon as we can to production. So, thanks very much for your attention, and please, if you have any questions, just get a hold of us.